We will begin the session. This session is on cost accounting. Hope everybody can hear me. This session is on cost accounting. So this first class of today will be an introduction to cost accounting, explaining what is the subject all about. So this cost accounting is a branch of accounting. This branch of accounting evolved to assist management in taking decisions. See, in case of financial accounting, it is only presentation of financial statements where you are going to book all your expenses and losses and all your profits and gains and then prepare your final account. But when it comes to cost accounting, it is not just stopped with preparation of financial statements. It further extends to assisting management in taking decisions. So it involves a more detailed analysis of the items of expenses, and whatever might be avoided can be avoided, whatever is controllable can be controlled, and all such measures can be taken only in cost accounting. So it is a more detailed analysis of cost. So now let me read out what is written in this, because so okay, this is written itself by me only. So let me just read out what is written in this. Cost is an expenditure. What is cost? Cost is an expenditure. What is costing? Costing is the technique or the process of ascertaining cost. Then what is cost accounting? You must first try to understand the difference between three terms. One is cost, the other is costing, and the other is cost accounting. We all know cost accounting is a branch of accounting. But what does all these terms mean? Cost is an expenditure. Costing is the technique or the process of ascertaining cost. Cost accounting is the recording, classifying, analyzing, allocating, and appropriating every element of cost to every unit of product or service. So now let me explain this definition. Cost accounting is the recording, classifying, analyzing, allocating, and appropriating every element of cost to every unit of product or service. So what does every term in the definition mean? Recording. Recording means it is booking for the expense. You just make a note of whatever you have spent. That is recording. Next, you classify. How do you classify? The classification of cost we will discuss a little later today itself. So what is classification of cost? You are classifying it into what is direct cost and what is indirect cost. What is directly involved relating to manufacture of goods and services, or what is indirectly related to manufacture of goods and services. You are going to classify the cost. Once when you classify the cost, later you analyze. You analyze whether they are avoidable cost, non-avoidable cost, controllable cost, non-controllable cost, and all such analysis you take up. Then you allocate the cost. There are various departments in an organization. So once when the cost is incurred, it has to be allocated to the various departments on an appropriate basis. So you allocate the cost on to the departments. Then what you do, you appropriate every element of cost to every unit of product or service. So what does appropriation mean? Appropriation is once when I allocate the cost to a department, it has to be absorbed or it has to be recovered from every unit of product or service. So I will try to find out what is the cost for one unit or what is the cost for one service which is rendered. So that is called as appropriating the cost or absorbing the cost or recovering the cost over every unit of product or service. After this, there is a purpose for which you take up anything. So now there is a purpose of going into cost accounting. That is nothing but the objectives of cost accounting. Why do we study cost accounting? What is the purpose of it? What is the objectives of it? It is number one, ascertainment of cost. So first, to find what is your total cost, you know what is cost accounting. Then fixation of selling price. The second step is to fix the selling price, be it for the product or for the service which is rendered. How do we fix selling price? It is cost plus profit. So first we must know the cost. To the cost you will add a profit margin and you quote your selling price. So it is ascertainment of cost, which is the first step. The next is fixation of selling price. Just now, as I told you people, see, it is in a competitive industry, we would try to compete with one firm to the other in the same industry, be it any industry. It can be even durable products, it can be software industry, it can be any industry. You name an industry, you will have to keep your cost under control. Only then your profit will be maximized, because beyond a point, selling price cannot be increased, be it for service or be it for goods. There is a ceiling limit for the selling price to be quoted. So when you have competing products in the same industry, you will try to compete with the other competitor only by controlling your cost, not just by increasing your selling price. So when you control your cost, you try to earn more profits. So ensure cost is under control so that profit is maintained. Next, take up cost reduction measures wherever possible. In the definition itself, I told wherever the cost can be avoided, you can avoid them. So by such measures, what happens? You can try to reduce your cost. Then, to provide information to management necessary for decision making. What types of decisions can be taken using this cost accounting branch? See, the type of decisions which can be taken using this cost accounting could be whether when a particular raw material or whenever a particular resource is limited, how effectively are you going to utilize the resource? That can be one decision which is guided by cost accounting. Then you can decide on which labor force to be employed, whether it is skilled or whether it is semi-skilled, whether it is unskilled or whether it is a combination of the set of workers. You can decide on that. Then you can also decide on, if you are an automobile industry, you can decide on making your component yourself or buying the component from elsewhere. If it is a trading industry, in a trading sector, you can decide on the combination of products which is to be marketed in the market. So it is not just one product to be sold at a time. You can combine two or more products and have a sales mix. So there are various decisions which can be taken using this branch of accounting. I just quoted a very few. While discussing the subject in detail, you will get to know how cost accounting is very useful. Now coming to classification of cost. This classification of cost, it is widely classified or broadly classified into direct cost and indirect cost. Under direct cost, we have direct material, direct labor, and direct expenses. And under indirect cost, we have indirect material, indirect labor, and indirect expenses. Just think for yourself and see what are the costs to be necessary to manufacture a product. The cost necessary to manufacture a product will be raw material, the person to handle the raw material to make it into a finished goods, for which we will pay them the wages, which comes under category of labor, and then you incur certain expenses to convert the raw material into finished product. So these are the three costs which are incurred for converting the raw material into finished goods, or the costs which are incurred by a manufacturing sector. So first is raw material. That raw material can be classified into direct material and indirect material. What is direct material? What is indirect material? Any raw material which is directly involved in the manufacture of the finished product, you call it a direct material. Examples of direct material can be many. If it is a clothing industry, the cloth itself is a direct material. So first is direct material. What is indirect material? Any material which is used for bringing the direct material into shape and form is called as indirect material. Example, the same clothing industry itself, to bring the cloth into a proper form, to bring it into a shirt or to bring it into a salwar, you need thread, right? You need a sewing machine. The cost of sewing machine will be recovered in the means of depreciation. You need thread. Thread is an indirect material. Thread is the material. Here again, thread is a material, but it is indirectly helping to bring the direct material into shape. So it is indirect material. Then labor. The labor force who are directly involved in manufacturing the product, the skilled workers, they are called as direct labor. What is indirect labor then? That labor which helps the direct labor to perform the task comes under indirect labor. Example of indirect labor could be the assistants who are not directly involved in manufacturing the goods, but who are going to assist the skilled worker to perform the job. Pick up the tools and give me. If you have an assistant, the wages paid to that assistant, he is not directly involved in the job. The wages paid to the assistant is only an assisting job. So what happens? The wages paid to him comes under indirect wages. So is it only the raw material and is it only the wages which are incurred for manufacturing the product? Not necessarily. You incur certain expenses also. So once when you are in a factory premises, you will hire the factory premises or you will own the factory premises. If you are hiring the factory premises, you will have to pay rent. If you are owning the factory premises, you will have to charge depreciation in your books. So then for the plant and machinery, the manufacturing of the product will be undertaken with the use of the machinery. That machinery, it can be either your own or you can hire it. So there are various costs which are incurred for converting the raw material into finished goods, and such cost is grouped under expenses. So now these expenses again is classified into direct expense and indirect expense. For material and labor, I could explicitly give you an example saying direct material is the raw material involved. Direct labor is the skilled labor who is involved in performing the task. So what comes under direct expenses? See, if I am a manufacturing organization, the direct expense which I incur will be the license which I take for manufacturing the product. Just because I have the raw materials and just because I have the machinery, just because I have sufficient finance to carry out my operations, I cannot start any business just like that. I will have to possess a license for manufacturing the goods. So the license or the excise duty which is paid by the manufacturer to manufacture the respective product is an example of direct expense. Then what are indirect expenses? The rent which is paid for the premises. The rent which you pay for the premises, it is not just for one product which you are going to manufacture. During a period, you can manufacture 1 lakh units. So you will recover the cost over the entire output and not just for one particular unit. So what happens? There are certain expenses which are incurred in total and you will have to share them among the products or recover them from every unit of product. So such costs which are incurred in total and which are to be recovered from every unit later is called as indirect expenses. Just now I gave an example, rent of the premises. It can also be depreciation of the asset. The asset you use, it is not just for manufacturing one product. It is for manufacturing multiple number of products of the same type or of different types during a period. So all such expenses comes under the category of indirect expenses. So now what is the term we are going to refer to these costs? The direct cost is otherwise called as prime cost because these costs are primarily involved in manufacturing the product. The prime cost or the primary cost which is incurred for manufacturing the product is called as prime cost. So what are these indirect costs called as? These indirect costs are called as overheads. This overhead can further be subclassified based on the purpose or the place or the function for which it is incurred. It can be classified into factory overheads, administration overheads, selling and distribution overheads. If you are going to incur certain expenses at the factory place, you call it factory overheads. If it is related to administrative work, you call it administration overheads. You can have the office stationery, you can have all your stamp papers, you can have all your software appliances, you can have all your order requisition forms, which is all handled in the office place. So all that comes under office and administration overheads. Then you will take steps to market your product. You will have advertisements, you will have salesmen, you will have door-to-door delivery, you will have after-sale services. All this comes into selling and distribution overheads. So these are just the broad classification of costs. So now just coming into detail about the classification of costs. On the basis of relation to cost center, cost is classified into direct and indirect cost. Direct cost is expenses directly incurred for producing a product or for rendering a service. The sum of direct costs are called as prime cost. Indirect costs are expenses for supportive activities required for producing the product or for rendering the service, and the sum of indirect cost is called as overheads. On the basis of function, it is classified into factory overheads, administration overheads, selling and distribution overheads on the basis of functional activity for which the cost is incurred. On the basis of behavior, cost is classified into fixed cost, variable cost, and semi-variable cost. Fixed cost remains constant at all volumes of production. The best example for fixed cost could be rental expenditure. See, I am hiring a place to carry out my factory work, to carry out my manufacturing work. I will have to pay rent for it. Whether I am going to produce 1 unit or 1 lakh units, or whether I am not going to produce at all. Now, this lockdown scenario, factories are all shut down. So what happens? Should I not pay rent? No, I will pay rent. So fixed costs are cost which does not vary with the volume of production. It will remain constant irrespective of the situation. That fixed cost will be avoided only if you are not going to continue your same business. Only if you decide to shut down your business, you will stop incurring fixed cost. Even if you're changing your premises from one place to another, to the other place, again you will incur fixed cost in the form of rent. So only when you decide to shut down your business, you will not incur fixed cost. So that is fixed cost, which does not change with the volume of production. Next is variable cost. In contrast with fixed cost, variable cost varies with the volume of production. For every unit, you may need 1 unit of raw material. So for 2 units, you will need 2 units of raw material. It is directly proportional. It is directly proportional. What is directly proportional? The input and the output is directly proportional. With increase in output, there is increase in input. With decrease in input, there is decrease in output. So it is directly proportional. For the change in volume of production, there will be change in variable cost. Then what do you mean by semi-variable cost? Semi-variable cost is partly fixed and partly variable. So how are we going to identify what part of that semi-variable cost is fixed and what part is variable? See, there are certain costs for which you incur certain slab rates. For example, the power consumption by the factory premises, for which you will have slab rates. Number domestic purpose, whatever we use as the electricity bill, that itself has got a slab rate. So if you are going to fall within that slab, your rate is fixed. See, if they say 3 rupees per unit or 5 rupees per unit as the electricity charge, it will remain fixed within that slab. So what happens? You have a minimum rental which you have to pay, that is fixed cost, and that 3 rupees or 5 rupees per unit is variable based on your consumption. So what happens? Even if you are going to shut down your business, you will have to pay the minimum rental to hold on the electricity supply. Otherwise, what happens? They will take away the fuse and go off. So what happens? You will have to pay a minimum rental. You will have to pay a basic rental for holding on to the electricity supply, for holding on to the power supply in a factory premises. So that is fixed cost, whether you are going to utilize it or not. Then based on your consumption, your cost will increase based on the respective slab rates. So that becomes variable. So within the same cost, if it is going to behave both in terms of fixed as well as in terms of variable, you call it the semi-variable cost. Fixed cost is also called as period cost because it is associated to the period, and variable cost is called as product cost because it is associated to the product. What are the other common terms which we will be using in the subject of cost accounting? Number 1 is opportunity cost. Opportunity cost is the value of alternative which is foregone because of an alternative option. So if you have 2 options to decide, one, go for mechanization, or one more, go for manual labor. So when you are going for manual labor, you will have certain advantages and disadvantages. And when you are going for mechanization, you will have certain advantages and disadvantages. So which one are you going to choose? One, if I'm going to choose manual labor, it will take more time compared to machines. But regarding the perfection of the task or regarding the quality of products, you can ensure more because of personal handling than by machines. So what happens? It is like one over the other. So if due to mechanization, if I'm going to earn a certain amount of money, and if I'm going to go through manual labor operations and I'm going to earn certain amount of money, these both are my revenue. So if I'm going to choose one over the other, now I say I need mechanization. I don't want manual labor. So the benefit which I'm going to forego because of refusing the manual labor is what is called as opportunity cost. There is no spending for opportunity cost. It is the value of the benefit which is foregone because of choosing the other alternative. There is no spending, there is no outflow when it comes to opportunity cost. It is only the value of the benefit which is foregone. Then sunk cost. Sunk cost is historic cost. It is cost which is incurred in the past, long ago, which is of no relevance for decision making for the organization. See, I have built up my factory in a place which was owned by my great grandfather. My great grandfather bought it for 1 lakh rupees. That land is worth 1 crore now. So the 1 lakh rupees spent on land by my great grandfather is a sunk cost. It is historic cost which is of no relevance for current decision making. Then is imputed cost. Imputed cost is notional cost which do not involve any cash outlay. So just now I told about opportunity cost. Opportunity cost also can be an example of imputed cost. For another example of imputed cost could be depreciation. Do you spend for depreciation? Depreciation is only an amount of the asset which is written off over the period due to wear and tear or loss of time or obsolescence or whatever reason it might be. So this depreciation does not have any outflow, but still you are booking it as an expenditure year after year, be it in financial accounts or it is in cost accounts. So this cost is known as imputed cost, for which you do not have any cash outflow. Then the marginal cost. The sum of all variable costs is called as marginal cost. These 4 terms are what you commonly use in cost accounting, and that's why I have just mentioned them there. Is the introduction to cost accounting clear to everybody? Whenever I expect you all to interact, please do. Is the introduction to cost accounting clear for everybody?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Okay. We will move on. I will stop sharing and share another PDF.